All right, we are back. We're looking at the SPY, the Spider S&P 500 ETF index, and I want to give a quick update on this chart. On my last video where I talked about the SPY, we were looking at this support bounce here, and if you look at the chart that I put up on the video, I believe it was last Thursday, we ended on this candlestick right here. This candlestick entered into this buy opportunity, and in that video, I was saying, hey, I'm not sure if I would be a buyer here, but this area is giving me a heads up that there's potential support laying around these prices. So, if I'm a seller or if I have a put option, I would look to cash in that position right here. Um, but what I was saying in that video was look for a bounce up to these next two sell levels right here and right here. And if you look back on my chart, you'll see that these levels are there before this market makes its move. Um, so after we fell into this level, the very next day, the market has a very nice uptick. This was a 9% move back to the upside, and it pretty much came back into this zone up here. Um, didn't come as quite high as I thought it would, but it came into this zone and then immediately sold off. I believe it was like 12, 13% yesterday. And then today we are having a little bit more support in this market, and we have another green candle. So far this level here, and to show you guys what level I'm even talking about, there we go. This level right here um, is showing us some support. So we said watch for a bounce here. We did get a significant bounce, a 10% bounce. So if you were day trading this, that was a great call. But again, I was saying, I wouldn't necessarily buy here because of the downward pressure. You really are catching a falling knife at that point. But if you did, hey, you made a little bit of money. Hopefully you got out when it reached this sell zone up here because it did smash another 13% against us. And then today we're rallying a little bit. So we're catching some support. Let's see what this market does here. Like I mentioned on the last video, I would not be surprised to see this catch support, not only rally up. Now that we've gone into this zone and back down, I think this zone is used up. We might hit our head on this zone a couple more times before we break through to the upside. Um, but I wouldn't be surprised to see this market go all the way back up to 300 before it hits some real resistance once again and makes its way back down. Um, and a couple of different reasons for this. Mainly the support zone that exists down here at these prices. But secondly, the Fed came out and announced another round of quantitative easing, and I believe they did a $700 billion injection into the bond market yesterday, if I'm not mistaken, and they're planning to do upwards of 1.5 trillion. But that's what they say. I truly believe they're going to do whatever it takes to really hold this market up and hold interest rates low. And I'm not saying that's the right thing to do because the last 8 years they've been doing that, saying they're saving the markets, they're saving the markets. They're not saving the markets. They're just pushing the crash further down the road. So another round of QE might quote unquote save the markets temporarily and cause a nice little rally and give people some relief that this market isn't just crashing all the way down. But what I'm worried about is this market starting to rebound from here and the narrative on TV becoming, telling everybody, look, the market's caught support. It was just a kind of a flash crash because of the coronavirus scare. The economy is still great, great time to buy, et cetera, et cetera. I can see the media outlets starting to push that narrative as this market bounces. However, I'm worried that a lot of people might get too comfortable with that narrative, start to buy into this market, believing this market's going to continue to rally to break new highs, just to have this market rally into significant resistance and potentially another leg down to break even lower lows. That's my outlook. I mean, I know it's a very specific outlook. A bounce from here, a media narrative of economy getting better, people jumping into this market a little too late into this rally, and catching another leg down to the bottom to break new lows. So we'll see how accurate that forecast is down the line, but that's what I'm looking at for the S&P. There's a whole lot of fundamental analysis that goes behind that technical analysis, but that's just what I feel is going to happen. I've seen it happen before, and that's just what I feel is going to happen again. Another indicator you can look at above and beyond the leading indicators that I have of price, I have volume and I have implied volatility. The volatility is more for my option buying, making sure I'm not overpaying for volatility or whatnot. But the volume is very important. So we see a huge spike in volume as this market falls off a cliff. But as this market is coming into this support area over here, we see a steep fall off in volatility. I'm sorry, in volume down here. So that's showing us that the sellers are leaving, and we might potentially start to get some buying action in here. And if we start to see green candles with increasing volatility, that's giving us a good confirmation that this market's picking up some steam to the upside. So let's keep an eye on that. And yeah, that's pretty much it for the S&P 500. Just kind of giving you guys an idea of what I think will happen there. So we'll continue to touch base on this market heading forward and see what it ends up doing. But that's my analysis on the SPY. I do believe we're headed lower, but midterm, I do believe we're going to get a nice little bounce, get some comfort back into the market just before another leg down to break new lows. So give me your guys' feedback. Let me know what you think. If you have any questions, if you want me to break down any other charts that you guys are looking at, feel free to send them my way. Email, call, email, text, whatever. I'm here to spread knowledge, to discuss, strategies that we can all use to help us all navigate through these tough times in the economy that we're currently going through. So that's about it. Talk to you guys soon on the next one. See ya.